You mentioned earlier a possible, not probable correction, and I want to come back to the high level of the stock market. Are there any participants to the FOMC to think that we are witnessing an episode of irrational exuberance or rational exuberance? And if there was a steep correction, would it provoke financial stability concerns?
So I don't comment on the appropriateness of the level of stock prices. I can say that by some valuation measures, they're in the upper range of their historical value ranges. But you know, I wouldn't want to speculate about what the consequences of a market correction should be. You know, we would look very carefully at the nature of it, and I mean, it really what hurts is if consumers are borrowing heavily and doing so against, for example, an asset that can fall in value. So that's a really serious matter when you have a housing bubble and highly levered consumers and housing values falling. We know that that's a really bad situation. A simple drop in equity prices is all by itself doesn't really have those features. It could certainly affect consumption and have a negative effect on the economy, though.
Thank you, Mr. Chairman. Mark Hamrick with Bankrate.com. One thing that's changed since the crisis is the majority of mortgages issued last year came from so-called non-bank lenders as traditional banks scaled back. What confidence do you have about supervision and I suppose also regulation in this space, given the role of housing finance in the crisis? Thank you.
It's a good question. So you're right that a lot of mortgages are now originated outside the system. Many of those, though, have to meet certain basic standards to be bought by the GSEs. I think if we look at mortgage credit more broadly, though, what we see is that credit is pretty widely available to people with high scores and with good credit records, and much less available than it was before the crisis to people with low scores and perhaps troubled credit history. You know, have we got that exactly right? I don't know. I mean, but that's the reality. In terms of those institutions, they do have supervision by the CFPB and other state regulators. But you're right. Much of the origination process has moved outside the banking system, and it's something we monitor.